Maarten van der Spek, you are Global Head of Strategy at BNP Paribas REIM. Thank you for joining us on BiTV.
Very good. Thank you very much for the invitation.
In your new report, a Lighthouse Outlook for European Real Estate, BNP Paribas REIM states that we are in a favorable economic context for real estate investment in Europe. What are the main fundamentals that leads you to show such optimism?
Yeah, so basically what we have experienced so far is this massive downturn, economic downturn, right? So it is basically an unprecedented downturn. We have never seen it in our lives. It's basically since the Second World War, we haven't seen such a downturn, and it was so fast as well. So, but that's something that is actually behind us. So what we are experiencing now is a rebound, and actually a strong rebound as well. This economic rebound, it will take a number of years. It's not like the downturn within a year. It's not like we have a rebound in a year. It takes a number of years. Do we get a full rebound, a full recovery of the total downturn? That will take a while. It's not that we within a year are back to pre-COVID. That's not the case. But nevertheless, if we have such a downturn, we will have a strong rebound. So that's where we are very positive. But the key point is we have this economic rebound, and economic growth typically is a good indicator of rental growth for real estate. So it's a good driver for real estate. Then on top of that, we have inflation. I don't know if people are aware, but last year, for instance, in US, lumber increased by 260%. Oil increased by 200%. Massive increases in commodities, and that will feed into different prices also in the real estate market. But on top of that, it will have an impact on rents as well, because we have this rental indexation happening. So this is another driver for performance for real estate. And finally, what we see is that the current yields, which are historically seen very, very low, actually relatively, if you compare it to the bond yields, there's a big spread between those. So they're very healthy. So we have these two drivers of growth for real estate. And on top of that, the pricing relatively is very attractive. Those are three very strong drivers for real estate, we believe, for the next coming years.
Okay. And therefore, the question on everyone's mind will be, what is your forecast for the commercial real estate investment market going forward?
Well, that's basically the consequences of this what we believe is that the real estate is actually very attractively priced at the moment. That there is a very strong demand from investors to put in more money into real estate for different types of reasons. One is relatively attractive, but also the allocation to real estate has been increasing. This strong drive demand for real estate is going to lead to further yield compression. And it is true that the current yields are very low, but we believe that there's further yield compression going to happen to yield levels that we haven't seen before. Well, actually we have seen, but more in places like Hong Kong or Singapore and not in Europe. But this will happen because there's such a strong drive and relatively attractively priced. And on top of that, we actually are seeing also some sort of sector rotation as well. So if you look at the investor demand, you see that investors, also driven by this whole COVID crisis, are focusing more on things like residential, which is a positive play during the whole COVID crisis. Logistics, obviously, but less on the more traditional asset classes, retail and offices in that sense. So that's basically happening, and we are actually very positive on the outlook for the coming years. On that.
Okay. And therefore, and you alluded to it, some sectors could be seen as more attractive to investors at the moment. Do you see some some geographies as well that could maybe benefit more than others. Some typologies of assets maybe that could be
Yeah.
gaining traction because of the current context.
Yeah, absolutely. So in our outlook, we're very positive on basically logistics and healthcare for different reasons. So logistics, the returns that we believe are very strong are going to be more front loaded. So short term, there's a lot of growth, a lot of interest, and a lot of investment demand. So we see strong yield compression still. So that will generate very high returns in the short term. But then it starts to modify, basically, moderate going forward. On healthcare, it's slightly different. It's more a stable kind of flow of investor demand, where yield compression is still happening. It's more like a structural shift and more demand in general for this asset class. So there we see more stable returns going forward, but very strong in that sense. And on regionals, one of the countries where actually we think investors should consider again is the UK. So and then especially probably in the office and logistics, and not really in for instance retail, because there's still a structural issue that needs to be solved. But we believe it's probably a good time to start thinking about the UK again. We had this Brexit, and on top of that, we had the COVID impact. We believe if you look at the fundamentals, very likely most of the misery, basically the impact, is priced in, and it's relatively more attractive now priced than places like Germany or France.
Okay. Well, thank you very much for this insight, and thank you all for joining us, and see you soon on BiTV.
Thank you.